Our discussion today is about the financial statements. The primary financial statements. What are financial statements? Financial statements are written records that convey the business activities and the financial performance of a company. Financial statements are often audited by government agencies, accountants, firms, and many others to ensure accuracy and for tax, financing, or investing purposes. What are the primary financial statements? 1. Income statement. 2. Balance sheet, also called Statement of Financial Position. 3. Statement of changes in equity. 4. Statement of cash flows. And 5. Notes to financial statements. Now we go to the purpose of financial statements. The objective of financial statements is to provide information about the financial position, performance, and changes in financial position of an enterprise that is useful to a wide range of users in making economic decisions. Financial statements should be understandable, relevant, reliable, and comparable. Now we go to the different rules and formats. US GAAP and IFRS are the best examples. We live in an increasingly global economy, so it is important for business owners and accounting professionals to be aware of the differences between the two predominant accounting methods used around the world. International Financial Reporting Standards, also called IFRS, as the name implies, is an international standard developed by the International Accounting Standards Board, IASB. US GAAP, or Generally Accepted Accounting Principles, is only used in the United States. US GAAP is established by the Financial Accounting Standards Board. Now we go to the distinctions and other characteristics of the US GAAP and IFRS, an overview of it. The standards that govern financial reporting and accounting vary from one country to country. In the United States, financial reporting practices are set forth by the Financial Accounting Standards Board and organized within the framework of the Generally Accepted Accounting Principles, GAAP. Generally Accepted Accounting Principles refer to a common set of accepted accounting principles, standards, and procedures that companies and their accountants must follow when they compile their financial statements. GAAP addresses such things as revenue recognition, balance sheet, item classification, and outstanding share measurements, among many other things. If a financial statement is not prepared using GAAP, investors should be cautious. Now we go to International Financial Reporting Standards, IFRS. International Financial Reporting Standards, or IFRS, are a set of international accounting standards which state how particular types of transactions and other events should be reported in the financial statements. IFRS are used by the International Accounting Standards Board, IASB, and they specify exactly how accountants must maintain and report their accounts. IFRS was established in order to have a common accounting language so business and accounts can be understood from company to company and country to country. More than 144 countries around the world have adopted IFRS, which aims to establish a common global language for company accounting affairs. The point of IFRS is to maintain stability and transparency throughout the financial world. IFRS enables the ability to see exactly what has been happening with a company and allows businesses and individual investors to make educated financial decisions. IFRS is a standard in the European Union and many countries in Asia and South America, but not in the United States. The Securities and Exchange Commission won't switch to international financial reporting standards in the near term, but will continue reviewing a proposal to allow IFRS information to supplement U.S. financial filings. Countries that benefit the most from the standards are those that conduct a lot of international business and investing. Understanding these differences between IFRS and GAAP accounting is essential for business owners and operating internationally. Investors and other stakeholders need to be aware of these differences so they can correctly interpret financials under either standard. That's it for now, and I hope you learned something from it. God bless everyone.